Clay Smolinski from Platinum Asset Management. Thanks for joining us.
Good to see you, Mark.
Now, one of the thematics that you've got running is around the Chinese middle class and the growth in Chinese middle class, which is forecast to rise from 300 million Chinese middle class to 600 million or thereabouts in the next 5 years. Probably the best place to start is, what is middle class?
Yeah, it's good.
And then what we want to talk about is, what are the investment opportunities that feed off this? That's where we're going.
Absolutely. So the definition of middle class, as it were, it's a fairly wide band, but the official definition is, you think about it in households. So if it's a household, you two parents and a child, and if a household is making roughly 25,000 Australian dollars to 100,000 Australian dollars a year, that is your classic definition of middle class in China. Now, I think a lot of people listening will be thinking, all right, a household making 30,000 Australian dollars, that's not a lot. But I think the thing to remember is the living costs in China are at least half of what they would be in this country. So from a purchasing parity perspective, a household making 30,000 Australian dollars will be attaining a reasonable standard of living.
Yeah, and there's 300 million of them now, and it's forecast to double in the next 5 years. So I just want to think through, as people earn more money, what do they do with it?
Yeah, so we always think about it's in stages.
Yep.
So I think when you first enter the middle class, what you start to see are, the key wants. The first things they will do will be to upgrade to a more modern flat.
Yep.
Remember, there is still a lot of communist era housing in China, especially in the tier 3 and 4 cities. Inside that flat, you'll want to upgrade to the more modern appliances. So you want that flat to be air conditioned, you'll want the latest washer, dryer, fridge, all of the basics we don't even think about anymore.
Yep.
The next will be, you'll want a more modern vehicle. So you'll get yourself a car, and a new one if possible. And then finally, you need to have a smartphone with a 4G connection. So that's your kind of the first tier. The second tier is when you start getting a bit more disposable income, and you're moving probably up in that range of that middle class earning band. The next things we see are travel, and particularly international travel. So you'll take your first international trip.
Yep.
You'll spend more on healthcare. This is a big deal. You will get better education for your children, and then the final one is financial services. So this will typically start with insurance, and then a little bit later down the track they'll start thinking about investments. And they're the big categories that we see.
And there's been enormous growth in the last 5 years in some of those categories already, and we're about to witness a doubling of the Chinese middle class in the next 5 years. I'm just interested, and I'm going to ask a lot here, are you able to put a perspective of what's happened in the last 5 years in some of those categories of smartphones, cars, travel?
Absolutely.
Just to help get a grasp of the numbers, because sitting in from Australia with a population of 25 million is very difficult to get perspective when we're talking about growth in middle class alone of some 300 million in the next 5 years. Yeah. So I'll hand over to you to put some perspective on it.
It's staggering when you think about it. It's 300 million people coming in. That's the size of the US coming into that middle class earning bucket. So we can look at it in a number of different verticals. So a good one is in international travel. So 5 years ago, China had Chinese nationals were taking 80 million international trips. Today that number is 150 million. So over the last 5 years it's basically doubled. What's really exciting about that though is less than 20% of Chinese nationals actually hold a passport at the moment, and that compares to most developed nations. Somewhere closer to 60% of residents would hold a passport. Yeah. So I think that's almost certain to grow, and China is now the largest outbound tourism market in the world, and I would be dumbfounded if it doesn't double again. Yeah. So it's now the largest market for air travel. We can look at automotives. So China last year sold 28 million vehicles. The next largest market in the world is the US, which is 17 million vehicles. So
that's
we're selling 11 million more.
And it was a down year last year in automotive.
And it was a down year last year.
China, yeah.
You wind back, we can wind back to 2010, 2011, you were selling 18 million. So you've seen, again, tremendous growth. What else can we look at? Smartphones.
Smartphones and internet. Yeah.
China is the largest smartphone market in the world. They are consuming about 400 to 450 million smartphones a year. Again, let's compare it to the US, which are consuming maybe 180. So we're more than double.
Yeah.
And that's just the recurring theme when you look at China. We always say that China, it's not the largest economy in the world, it's the second largest compared to the US. But when you look at individual product markets, it's the biggest consumer of smartphones, air travel, whatnot. The size of their markets are truly staggering.
And so one of the ways that you're investing and looking to make money from this thematic is through Ping An Insurance, which I googled up prior to coming here, and it's the #1 insurance company in the world according to Forbes. And so how does that relate to the rising of the middle class? What's the connect with what we've just talked about with Ping An? Perhaps tell us what do they do and how does it connect to the rise of the middle class?
Yeah, okay. So Ping An is one of the largest insurers in China, and their key businesses are classic property and casualty insurance, but in China that really means motor insurance. So they're the second largest motor insurance provider in that country, but they're also one of the largest providers of life insurance. So products that we're very comfortable and familiar with in the West. What attracted us to Ping An? And first we can look at the industry. So we were always fairly confident that the insurance industry in China would grow tremendously. And why is that? First, it's just your classic middle class product. As you become wealthier, you start accumulating products that are worth insuring, a car,
contents in your home.
You start thinking about it. So you had that driver, but the other big driver is China is still a country where there isn't a good social security safety net. There isn't a nice established pension system. So there is that desire as you start to accumulate wealth, you start thinking, well, I can't maybe rely on the government to take care of me, so I very much need to save for my retirement and save in case anything goes wrong. So. Yeah. From that, there was always a very large demand for life insurance, savings products and the like, and Ping An really met that need. Yeah. And then the question is, well, why Ping An and not some of the other Chinese insurance players? And Ping An was that great example of here you had a private entrepreneurial company competing against mostly state-owned enterprises. So most of the other players in the Chinese insurance markets were government-controlled companies. Yeah. And as you see time and time again, it's when you see that situation, it's generally the private company that comes out on top. And there was a lot of, when you looked at Ping An, there were just lots of evidence of that quality and trying to do things differently. And a good example of that would be, looking at their life insurance business. They always placed tremendous focus on training their agents. So putting a lot of emphasis on training them around the different policies, what policies are right for different people in different life cycles, but importantly, how to actually sell life insurance, which is not an easy task. And because of that emphasis on training, you saw basically far lower turnover in their agent force. Yeah. Their agents would make double the amount than competitors. And because of that, you retained the better quality people, but you also attracted better quality agents to your company, and it just further reinforced that advantage. So it was just a quality operation.
And one of the other aspects that's been talked about with Ping An Insurance is they're leading in technology, or FinTech, if you like, and there's been some commentators call it more a FinTech company than an insurance company. How do you react to that?
Yeah, so I think probably calling it more of a FinTech company than an insurance company is a bit of a stretch today when you compare the differential.
From a FinTech specialist, so it had that flavour.
When you look at the differential and the size of the two businesses, but I think the interesting thing, so Ping An has its hands in a lot of software and internet style businesses, but they've really often, the nice thing is they've just been really born out of their own businesses. So they've always had a focus on investing in software and technology to really run their motor and life insurance businesses better and at a lower cost. So we can go through some of those businesses. So
just one example of some interesting software that relates to their business.
Yeah, so look, So Ping An, if we can look at their motor business, Ping An has a world-leading claims assessment. So they're world-leading in using artificial intelligence to do claims assessment. So when you have a crash in China, a Ping An customer will be asked to take some photos of the damage with a smartphone. That will be sent into the system, and Ping An will basically examine those photos using artificial intelligence, and in 60% of cases, they can then assess and pay out the claim with no human intervention, and those claims are being processed and paid out in a matter of hours rather than a matter of weeks. Great for the customers, but also great from a cost perspective. And then I think the interesting thing about Ping An is that they've then taken that technology, they've placed that software onto the cloud, and they've gone out to other insurance businesses, and they've done this with some of their banking software as well, and said, look, we're willing to sell access to this software and create basically a software business out of that.
Licensing bit, which is annuity income stream.
Annuity, it's different, and I think it's quite forward thinking. So that's really the genesis of their FinTech, and in terms of global comparisons, they've just done a fantastic job at it.
And I think the point is that Forbes is nominating as the best insurance company in the world, and that's one of the reasons. It's just interesting. People wouldn't necessarily look to a Chinese company to be the best in the world.
Yes.
So,
yes.
Perhaps if we could have one other example of how you're investing in China with the thematic of the rising middle class.
Yeah. So probably one of the most exciting and largest opportunities ahead of us will be healthcare. In China. And I think the great way to put it into context is we've already talked about, for most product markets, China is the largest in the world. But when you look at healthcare spend, it's the odd one out.
Yeah.
So healthcare spend in China today is 1/3 of what it is in the US, and this is despite them having a population that is 4 times larger.
Yeah.
So you look at that and
so
say,
essentially on a per person basis,
it's minuscule. It's minuscule. And you just know that that's not going to stay like that forever. And interestingly, we're seeing the government, they can recognise that this spending is going to grow, and we're seeing a lot of reforms that the government is trying to put through in the healthcare industry at the moment, harmonising, drug clinical trial standards to the rest of the world, so you can easily start introducing Western drugs into the Chinese healthcare system. So they're very much getting prepared for the growth, and they know it's coming.
Yeah.
So we're looking at many opportunities within Chinese healthcare, and we view those opportunities like we would view healthcare anywhere else in the world. Namely, the companies that are providing kind of new cutting-edge treatments that provide good outcomes for patients at a reasonable cost will win. So in the fund, we have companies like Zai Labs and Seastone. Now, these won't be household names to anyone, but essentially in these companies, what we have, they're run by Chinese management who have importantly really grown up and worked for Western pharmaceutical companies.
Yeah.
And what they're essentially doing is they're going to smaller biotechs, say in Europe or the US, who have a great drug, but maybe don't have the expertise or the financial means to go off and do the clinical trials and the ability to distribute that drug inside China. And a company like Zai Labs is saying, all right, we'll partner with us, we will run all of the trials in China to get it approved, and then we will sell that drug and we will share the profits. And they've had fantastic success doing this with the most recent drug is an ovarian cancer drug, but we think, look, they've got a 10 to 15 year runway ahead of them.
Yeah. And I think that's the interesting aspect that you've spoken about before off camera, is that the runway for growth in investing in the Chinese middle class is measured in possibly decades, not months.
It's decades. And again, as we're talking about it, so we're talking about the middle class moving from 300 to 400 to 700 million people. Well, that's still only 50% of the population at the end of the day. And as we're just seeing basically the Chinese economy, we're seeing companies moving up the innovation curve. 15 years ago, it was about selling cheap labour. Increasingly, these companies are now developing semiconductor components. We're moving into artificial intelligence. The people
battery
working in
manufacturers, they're the world leader in battery manufacturing.
Correct.
So,
and the people working in these industries are certainly getting paid quite well, and that continues to fuel that ability to spend and consume and really increase their standards of living.
And to finish off on, I just want to go back to Ping An Insurance. So what's the price measured in a price earnings multiple, which is the share price divided by the earnings per share? Just ballpark, what is it at the moment?
It's roughly 10 times today.
Okay, so 10 times earnings, and those earnings have been growing at a
Roughly
reasonable...
20% per annum.
And so just for some perspective, if you were to look in the Australian market and pick a stock on 10 times earnings in the insurance sector, what would that be, I wonder?
It's a small subset. It's a small subset.
Not even AMP's trading on 10 times earnings, I don't think.
That's correct.
So Ping An is on paper cheaper than AMP with
20% growth.
Going like that, whereas AMP's earnings are not doing that.
No.
I'm being polite.
And I think if we want to think about maybe some of the great insurance companies in this country, so if we look at maybe an Insurance Australia group that owns NRMA and the like, that stock's on 17 times earnings and not really growing that much.
Okay.
Maybe something like a Suncorp would be on 15 times earnings and it's the same story. So they're the kind of big valuation differences that excite us about the Chinese market and the Chinese opportunity.
And so I think that's the main message that I'm taking away from this, that there's a massive demographic change here in terms of people who are going to have wealth that they've got to spend on goods such as insurance, such as healthcare, such as motor vehicles. You've got that demographic, but by the same token, you've got a massive tailwind, but a market that is actually cheaper than what you can buy the equivalent without that tailwind in Australia. Is that... That's how I'm thinking about it.
It's a fair categorisation. It's a fair categorisation.
So this is a generational opportunity. Thanks for spending some time with us just to talk through some of the componentry of it. Appreciate it.
More than welcome. Thank you.